important things about being an investor in 2024 is how much the world is changing and how important different markets are to your investments. And today what I'm going to do is I'm going to have a look at where the Australian market is relative to the Canadian market. I'm going to draw some similarities. And I think this is a really good example of how, regardless of where you're investing, regardless of where you're living, you can't deny the fact that we are now in a global village. Money is becoming commoditized and easier to transport between borders. And your investments are impacted more and more about what's happening overseas, and we're all interconnected. So you might be investing in Australia, you might be investing in Canada, in Dubai, in the US, but what happens in these markets all kind of impacts each other more and more. And we're seeing that even practically with the way that it's now easier to send funds abroad with crypto. The digitization of money means that money is able to move quicker. And as it moves, it chases investments into different markets. So that's just a little bit of context as to why we are looking at comparing two different countries. But Australia and Canada, let's dig into it. They're more unique because I see a lot of similarities between these two markets, and they kind of send signals to each other. And if we're investing in Australia or we're investing in Canada, we can kind of look into each other's backyards and validate or pick trends before they emerge. And Australia and Canada have very similar economies. Canada's bigger, their population is bigger. So you've got a bigger population, but our economies are similar. Canada's economy is about 10% bigger in terms of GDP. Its currency, as you can kind of see on this chart, I started with this chart because your currency tells you a lot, right? Currencies are kind of are big markets, and they give you a lot of information. So the currencies are bigger. The Canadian currency does traditionally trend at a premium to the Oz. And that premium is usually about 10%. So if we go back 10, 20 years, you can always see that the CAD over the Aussie is somewhere around 5 to 10%, but let's just call it 10%. Canada has also been going through an interesting shift in interest rates. And what I'm going to do next is paint the picture of where they are and how that's compared to Australia before we get into actual house prices and the trends and what that means for you. So like Australia, interest rates in Canada have been rising, and really during the pandemic, they fell to zero. Australia, US, UK, very similar with what happened in Australia and Canada. And then they've had a really steep upward increase in rates. And the unemployment rate is higher in Canada. The inflation problem has been bigger, but I really like the Bank of Canada. They're one of my favorite central banks because one of the most frustrating things as an investor, as a real estate investor, is having to read central bank statements and they waffle and they don't tell you anything. And you get lost and then they change their mind the next month. That's the problem that the Reserve Bank of Australia has had. And we've kind of lost trust in the RBA statement, and we've looked towards what the market is pricing as the guide rather than the statement. Canada is different. They're very open. They're very blunt. I think they're quite honest as a central banker can be. And they made no secret of the fact that they were going to ramp up rates aggressively to stop inflation. They've paused, they've increased again, very transparent. But for the average investor, the trajectory is clear. They really, really went hard from mid-22 till now, till the time of this recording, in increasing rates. And that was a harder increase than Australia. And it slowed down the Canadian market. Canadian property prices that we're going to look at next really did soften or pull back at the beginning of 2023 and throughout 2023. But something really interesting has emerged. We're going to get to that, but let's have a look at the pricing environment in Canada, and I'm going to compare that with the pricing environment in Australia. Let's go to Canada's prices first. So because interest rates increase so aggressively in Canada, here's kind of what's been happening to market pricing. If you have a look, it went up, it peaked. Then when they started increasing rates, there was a big dip. This is aggregate pricing for the whole country, average sold price. The blue line is transactions. Not too worried about that for the moment. I just want to show you the price trajectory. But something kind of happened towards the end of the year. And one of the markets that I want to focus on is the actual Toronto market, because I'm in Sydney. I'm a Sydney snob. I think Sydney is the most interesting market in Australia. I know many of you aren't going to agree, but hey, that's just my personal preference. So I want to compare kind of what's been happening in Toronto with what's been happening in Sydney. And as you can kind of see in Toronto, that the market has not fluctuated as much. Very important. When we talk about national prices, it's important to understand the mini markets within each country. And this is a perfect example of how a premier market like Toronto has kind of been trending. This is since the beginning of the pandemic. So you can see that real explosion in price. Median prices went from about $750 to about 1.3. Then they came off 1.1, 1.2. That's not a big decline. That's not a big correction considering how hard they ran up. And what I want to do now before I go to the trend is compare that with the Australian markets. For the Canadians that are watching that don't know what's happening in Australia, or for the Aussies that are watching that aren't too familiar with where prices have been, I want to kind of take this Toronto chart and compare it with Australia. Now, keep in mind that we said that the Canadian currency, this is in Canadian dollars, the Canadian currency is about 10% more expensive than the Aussie dollar. We're now going to look at Aussie dollar figures. So here's where we're at in terms of the Aussie property market this year. So at the beginning of 2024, January. And as you can see, Sydney has performed a lot better. So the Sydney market is up about 12%. Melbourne, a bit softer. And the rest of the country is up. We had a really, really strong year last year because our central bank in Australia didn't push as hard as the Canadian central bank. Our economy has held up relatively well. Australia's unemployment rate isn't as high as the unemployment rate in Canada. We haven't had the extent of the inflation problem that they had in Canada. So obviously, when you put the brakes on, it's going to have an impact, but it hasn't had that much of an impact on the Toronto market. Remember that prices from the top to bottom went from about 1.3 to about 1.1. So that's not really a big correction. I mean, in percentage terms, I guess it may be, but what happened is that Canada slowed in 2023. The Aussie market slowed in 2022. So this is year-on-year change, but we kind of had our slowdown at the beginning. The Sydney market went through a correction period when rates started to rise. And then it plateaued and it started to post gains. And that's really important because I'm going to discuss one more thing, and then I'm going to talk about the trend that's also happening in Canada now and where we go 2024 and 2025, and why Australia's markets, particularly Sydney and Toronto, are sending us a very clear signal. One thing we've got to keep in mind with Canada also is that they closed the gates on foreign investment. It's not a topic that I've spent too much time researching. I've had a look at it, and they've obviously had an issue, a political or social issue with foreign investors coming into that market like Australia. Again, a lot of similarities there, and they've been a lot more aggressive in closing investment by foreigners into their market. But let's put that aside. And if we as Aussie investors are kind of looking and saying, okay, we had a really good year last year, what's on the cards? I think we can learn from the Canadian experience that even with rates rising, even with them struggling with inflation, even with them having a correction and having to also impose foreign limits, the market there is actually starting to pick up. The market there is actually starting to turn. And here's what caught my eye, and here's the purpose of this analysis and this comparison. Canadian prices have actually plateaued and started to increase. So in the fourth quarter of 2023, prices nationally were actually up 4.3%. Now, sure, you could say that, they were down for most of the year and that market has been softer, but it doesn't matter. The trend is very important. The trend shows one of two things. One, that supply is very, very tight in Australia, in the US market, and in the Canadian market. And we do have a generational issue with housing supply in these markets. It's not just one country, an anomaly, but the impact of the pandemic and the disruption to the housing supply chain and the disruption to employment is starting to really provide a firm cushion for house prices. We've seen that in Australia. We're barely able to build 100, 150,000 houses. We're seeing our governments walking away from their commitment, their political commitments to build housing. And the same constraints are obvious in Canada and the US, and that's providing a cushion. I think that's the reason why, despite having such an elevation in interest rates, despite interest rates having been pushed so hard in Canada, you're still managing to see the market rise by 4.3% in the space of one quarter. Now, one quarter doesn't establish a firm trend, but to me, it's the start, and to me, it's important. And what happened in Canada in the fourth quarter is similar to what happened in Australia in the second half of last year. So I'm seeing those two similarities, and I'm thinking there's something there that we can't ignore. There's a pattern starting to emerge. And I think that leads to the second point. The second reason outside of supply is that investors are starting to realize that these interest rates will eventually start to come down. And investors are very savvy. Investors are very clever. Investors are forward-looking. The market is forward-looking, not backward-looking. And the market is starting to suggest to us that investors, or the weight of money, is starting to get ready, starting to anticipate what happens when interest rates, not if, when interest rates start to come down from their highs. We don't know when that will happen. We don't know the extent, but we're now starting to see confirmation in markets that it will happen sometime end of this year, and people are putting their money where their mouth is. So we can learn from Canada that the demographics, the trends are similar to what's happening in the Aussie market. We can see similar things in Toronto than we can see to Sydney. We can form a view that there is probably a 6 to 12 month lag between the two. Maybe Australia front runs the Canadian market in some ways. Maybe that disruption to foreign investors did unsettle the Canadian market for a little bit of time, but they're both trending higher, and their prices are benefiting in both markets from really, really depressed supply. And my last point is this: when central banks increased rates, what they did is they made the cost of building a home much, much more expensive. They may have slowed down other parts of the economy, but the impact on housing has been very inflationary. And I think we're going to feel the fallout of that over the next few years. Houses are not going to become cheaper. They've become a lot more expensive to build. Apartments are more expensive. Funding is more expensive. That's feeding itself through the food chain. So the impact of the disruption of 2019, 2020, 2021, we're still feeling that now. And the impact of rising interest rates, I think we're still going to be feeling over the next few years. And I don't think it is until the end of the 2020s or the early 2030s that you start to see anything that puts downward pressure on the cost of manufacturing housing in main metropolitan markets. And I think, your key markets in Canada, US, UK, Australia, and Asia are going to hold their floor and benefit when interest rates come down. I hope that provides a really good summary for you. I hope that helps you form a different view as an investor. This is the way I think. This is the way I look at markets. And hopefully that is of value to you. If it is of value, please like, share, subscribe, and send this to someone who you think might find it useful. Happy investing.